Join me as I dive into the unpredictable world of the open stock market and try to predict what's next for it. The stock market is a vital part of today's economy, influencing everything from individual investments to global financial stability. Understanding its movements and what might come next is crucial for anyone involved in investing or just interested in economics. The open stock market's dynamics can shift rapidly, impacted by a myriad of factors both domestically and internationally. Economic uncertainties continue to pose significant challenges to the stock market. With inflation rates fluctuating and geopolitical tensions on the rise, investors are finding it increasingly difficult to predict market movements. These uncertainties can lead to market volatility, making it challenging for investors to make informed decisions. The impact of such uncertainties can be seen in the way stocks react to economic indicators and news events. Geopolitical tensions also play a critical role in affecting market sentiment. Conflicts and trade disputes between major economies can lead to sudden and sharp market movements. Moreover, the rise in inflation has been a pressing concern, with many fearing it could lead to higher interest rates and reduced consumer spending. These factors combined create a complex environment for investors to navigate. The pandemic has had a lasting impact on the stock market as well, accelerating changes that were already underway. It highlighted vulnerabilities in supply chains and led to a surge in remote work, changing the way companies operate. As we move forward, it's essential to consider how these changes will continue to influence market dynamics. Interest rates are a crucial factor influencing the market. The decisions made by central banks regarding rates can significantly affect investor behavior and overall economic activity. When interest rates are low, borrowing becomes cheaper, often leading to increased consumer spending and business investments. On the other hand, high interest rates can slow down the economy by making borrowing more expensive. Technological advancements are another driving force behind market movements. The rapid growth of tech companies and innovations in areas like artificial intelligence and renewable energy are reshaping investment landscapes. Market experts closely watch these developments, as they can indicate future trends and opportunities. The behavior of consumers also plays a pivotal role in shaping the market. Consumer spending accounts for a significant portion of economic activity, and shifts in spending habits can signal broader economic trends. For instance, a move towards sustainable products or digital services can boost certain sectors while challenging others. Insights from market experts suggest that keeping an eye on these factors can help investors make more informed decisions. By understanding the interplay between interest rates, consumer behavior, and technological innovation, investors can better navigate the complexities of the stock market. The rise of sustainable investing is one significant prediction for the future of the stock market. As awareness of environmental and social issues grows, more investors are looking to put their money into companies that prioritize sustainability. This trend is not only a moral shift but also a strategic one, as companies that adapt to changing consumer values are likely to thrive. Another trend is the increased focus on technology and innovation. With advancements in AI, renewable energy, and biotechnology, investors are eager to capitalize on the next big thing. Companies leading in these areas are likely to see significant growth, making them attractive investment opportunities. The evolving regulatory landscape is also something to watch. As governments around the world look to address issues like climate change and economic inequality, regulations are likely to change. These changes can have profound impacts on the stock market, making some sectors more favorable than others. Shifts in global economic power are also on the horizon. Emerging markets are expected to play a larger role in the global economy, potentially leading to new investment opportunities. Keeping an eye on these developments can help investors diversify their portfolios and tap into growth in new regions. In conclusion, staying ahead in the stock market requires a deep understanding of the various factors at play. From economic uncertainties and geopolitical tensions to technological advancements and shifting consumer behaviors, there's a lot to consider. If you have any thoughts on what's next for the open stock market, please share them in the comments below. Also, check out my previous video on investment strategies for beginners, which might offer you some valuable insights into navigating these complex times.